Hello, my name's David Paradise from Paradise Investment Management. I have here with me Paul Mason and Kevin Beck from our Denver office. They run our global small and mid-cap portfolio. It is up 18% per annum over the last 3 years, which is very similar to our domestic small cap fund, which is up 18% per annum over the last 13 years. So can you tell us what's next for us in the portfolio?
Yeah, thank you, David. Despite the strength in markets that we've seen over the last 3 years or so, we continue to see a significant amount of opportunity in the global small cap market place. The primary reason is there's almost 14,000 investment opportunities outside of Australia, and as you know, we run a 50 stock portfolio, so there's always the chance to find great little businesses from which we think we can compound at these sort of rates of return in the future. And so again, despite the strength in markets, we continue to find little niches of opportunity in places like U.S. manufacturing, emerging markets right now. For example, companies that are coming out of bankruptcy. The UK has been a strength in our portfolio for new investment ideas.
Can you give us some examples of some of the stocks?
Yeah, sure. In the UK, for example, we purchased an advertising agency in March called M&C Saatchi, which is a global advertising business that was trading at a significant discount to its peers, and since we purchased that, it's up 60% on the back of a nice merger within the industry that suggested it was worth a lot more. And it's got great emerging markets exposure, which is a massive growth area for that business, which over time we think the market will really appreciate.
What's the upside, do you think, in something like that?
Well, when we purchased it, it was trading on around 1x sales, which this kind of business across the globe for that kind of quality should be on more like 1.7, 1.8x sales. So at the time, it probably had 80% upside, depending on what the sales growth was. Is up close to 50%, maybe a little more since we purchased it.
Over what time period?
That's since March of this year. So it's been an aggressive performer and a nice one for our investors.
Okay, and what other ones are out there?
Yeah, I'd say another great example is Kodak, which has just emerged from bankruptcy. So this is another opportunity to play the inefficiencies of the bankruptcy market. Everybody knows the Eastman Kodak brand. The business that's reemerged from bankruptcy is much smaller, leaner, has more competitive advantages, no debt in the business, no pension liabilities, doesn't pay any tax, and we think has the ability to grow quite strongly from here.
And percentage upside, do you think, from
We think there's 60 to
valuations?
70% upside in that asset over the next few years.
Right, okay. Can you give us an idea of some of the ideas themes that are flowing through the portfolio at the moment?
Yeah, sure. We've liked this idea of increasing consumption in emerging markets. So as these third world countries develop into more developed economies and there's wage inflation and an increase in discretionary spending, we like to be in some stocks that will benefit from that spending.
And do you give some ideas?
Yeah, maybe one example is a company called Mandem, which is actually listed in Japan. But most of its growth is actually coming from emerging markets. They own a hair care and shampoo brands, 30% market share in Japan, but actually in Indonesia, India, Thailand are growing quite quickly. That accounts for over 50% of their operating profits. And so, again, this is the type of asset that is a franchise. Unilever and P&G would love to own this asset over time. It has very strong market shares, no debt, and has the opportunity for us to compound in a long period of time.
Yeah, it's interesting in this small end of the marketplace that you get these huge, great opportunities which are branded products very cheaply. It's something you don't find in Australia. Thanks very much for that, guys. Greatly appreciated. As you can see, the portfolio is in great shape and they're finding great stock opportunities. This will, in turn, deliver great performance over the long term. If you'd like to see more information, please refer to our website and we'll keep you updated on developments in the portfolio.